Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1164A, and today's date is December 28th, 2016, and the title of the episode is, The Central Bankers Are Warning That Under Trump's Policies, the Market Might Turn in 2017. Let's get into the economic collapse financial news. Now, today we can see the market, it declined a little bit by 100 or so points, and we see all over the corporate media, they're talking about the stock market, how, it might not hit 20,000 points right now. Look what just happened. And when we look at this, we can see that this most likely is part of their plan. Now, I'm not saying that 100% this is going to hit 20,000 points on Friday. Remember, we're looking at indicators. We're looking at what these individuals do, their thought process. And from everything that we've been looking at and everything that we've been seeing, we can make conclusions. They brought unemployment down to 4.9% right before the election. We thought it was going to happen, and I was actually surprised when it didn't happen until, 2-3 days before the election, it came down to 4.9%. And then right after the election, it came down even further to 4.6%. Right before the election, all of a sudden GDP surged to 2.9%. Again, revised after the elections to 3.5%. And here we are with the Dow. To take this entire economy and have the Dow hit 20,000 points, this is exactly what the central bankers Obama want. They want everyone to believe that this economy is completely recovered, everything is fine, nothing to worry about. So when we look at all the information that we've gathered, and we put all the pieces together, and we get into their train of thought, we can say, listen, to make it look real and to make it look convincing, what we need to do is not have it hit 20,000 points just yet. Let's wait and have it decline a little bit so people say, okay, it's not that obvious. Maybe it won't hit 20,000 points. And then come Thursday, maybe bring it up a little bit. Not too much. And then Friday, boom. Bring it over 20,000 points. Now, is it going to happen? We don't know. But what we're doing is we're following and trying to figure out exactly what they are up to. And everything is pointing to this right now. And I would actually be very surprised if they don't push it over 20,000 points. But we'll wait and we'll see, and we'll see what happens. But when we look at all the other economic indicators and we look at the hard data, we see that the Obama administration, the central bank, they've been manipulating a lot of information to keep the illusion that this economy is really doing a lot better than it is. And we've been following all the economic indicators. We've been tracking them. And from our data, it shows that we're actually in a recession, heading towards a collapse scenario. And everything the corporate media is pushing out there, everything the Obama administration is pushing out there, I'm going to say this is all fake news, because what we're really looking at is things are rapidly falling apart. When we look at, let's say, pending home sales today, we see that pending home sales, they have tumbled. And this kind of makes sense because mortgage rates are surging and pending home sales have declined. The National Association of Realtors reported that in November, the pending home sales, they plunged to the lowest level in nearly a year. They slid about 2.5%. Now, this is completely opposite of existing home sales and new home sales. But we know you can manipulate this data by revising, by having hedge funds and investment companies purchase these homes. And at this point, with the pending home sales, I don't think they're really too worried about this anymore. Because right now, all eyes are going to be on the stock market, and they're going to be looking at that and saying, okay, see, the economy is absolutely fine. And Mark Hansen is looking at this, and he's saying that, okay, we've reached the point where home sales are at the highest point ever. In 20 cities, not the entire country. Remember that. He's saying that in a couple of months, we'll probably see a complete disaster in the real estate market. That there's going to be a lot more pain in the housing market. And I can definitely see this coming. We've been following this, and I've been looking at houses in the Northeast, in the Midwest, in the South, out in the West, and I'm not looking at the 20 cities. I'm looking outside of that area. And real estate is a complete disaster. When the mortgage rates increased, houses have been on the market even longer, and people are trying to desperately sell them by lowering their prices. But guess what? Nobody is coming to purchase. This is the main problem. Most of the homes in these 20 cities were purchased by hedge funds and investment companies. Blackstone at one point was spending about $100 million a week, and they purchased something like 43,000 homes. Keep them off the market. Rent them if you can. And when you keep homes off the market, it drives prices up. And we could see why all this is happening right now, because they need this illusion. They need everyone to believe that the economy is really doing well. This is why the central bank had to raise the interest rates at the last minute in December of 2016. Of course, if they didn't, they would lose all credibility, because they said they were going to raise the rates not once, not twice, maybe 3 times in 2016, and they only did it once, which shows you that they were really never going to do this 3 times during 2016. Actually, they're not even going to do it that many times during 2017. Because, of course, they were saying, oh, it's the data, it's the data, it's the data. But here we are with unemployment at 4.6%. It was at 4.9% for quite a while. The stock market keeps moving up and up and up and up. And they're trying to convince us that retail is doing well, housing's doing well, everything's doing fine. But under all of this, they know the economy is a complete disaster. They know that if they increase rates a lot, well, the whole thing comes crashing down in a split second. And I do believe this was their signal saying that, okay, it's time to bring this entire system down. Now, the central banks, we know they are trying to get rid of cash, and they're trying to do it as quickly as possible. They used India as a test case, and we can see right now that they're going to be pushing this forward. Now, we know the central banks right now, they do not like cash whatsoever. And I'm talking about physical cash, not their electronic dollars. And we see right now that Janet Yellen is out there thinking, she's saying that the US dollar is not a convenient store of value. And, well, she's actually correct, because we know the dollar has lost 96% of its value, its purchasing power, over the last 100 years or so. And anyone who has kept their money in cash has generally lost money virtually nonstop. Now remember, right now, throughout Europe and in Japan, we have negative interest rates. And here in the United States, the interest rates are very, very low. They don't want people keeping their cash in the banks. They want them to take it and put it into bonds. They want them to take it and put it into real estate, put it into the stock market. But this hasn't been working. And they did this on purpose because they wanted to boost the illusion that the economy was doing well. Now, one thing they didn't realize, or maybe they did realize it, but they didn't really care, is that people were losing jobs left and right. And since 2008, people lost a lot of their wealth. And people don't have the funds they used to have. And this is why most of the people aren't taking their currency and doing what they want. And what did they want? They want people to take their currency and spend in retail. It's not happening. They wanted people to take their currency and put it into the stock market. Well, we can see right now the stock market is being boosted by the plunge protection team, the high-frequency traders, the free money from the Fed, where they give it to the banks, and the banks take it and they pour it into the stock market. It's not the everyday retail investor. Yes, they might be riding the wave right now, but the majority is not from the retail investor. And we see right now, their push right now is to get rid of cash. They want to get rid of cash. They don't want people to take out their funds physically, because they're very worried about what is going to happen during the crisis, where people are going to run and try to take their funds out of the bank. And we see out in England, with the FTSE 100 soaring to new record highs, just like the Dow, well, the people in England, well, they're holding on to their cash. because they're worried. They're hunkering down because they realize that this is not going to last whatsoever. Personal deposits grew at an annual rate of 4.8% in November, and they increased by 32.4 billion pounds in the first 11 months of the year, outstripping the 19.8 billion pound growth in the same period of 2015. So individuals, they are hoarding their cash. They are looking at 2017, and they're saying that something is about to happen. Now, we are getting a warning from the central banks, JP Morgan Chase, that with Trump coming into the White House and putting forth his policies, his economic policies, there is a chance of the stock market turning in 2017. Because they're talking about his corporate tax policies, infrastructure spending, and they say this represents a major equity risk during the opening months of 2017. Now, to me, this is a warning, letting everyone know that once Trump is in the White House and he puts forth his economic policies, that the market might turn down. And what they're really saying is that they will crash this system. They're putting out the warning right now, letting you know that this is exactly what they're going to do. And we could see right now, most likely, the establishment, the central bank, they're going to make Trump's presidency horrific. They're going to bring the market down. Actually, they're going to bring the global market down, because what we've been seeing around the world, out in Europe with the Brexit and the Italian referendum and the Spain referendum and France, here in the United States, we are going against the central bank. The people are going against the central bank. Now, the central bank will respond. They will respond in a way where they'll make everyone's lives miserable. Now, of course, they're not going to be blamed for this. They will point the finger somewhere else. Russia, North Korea, they'll blame it on Trump. Everyone but themselves. And what's going to happen here is the economies around the globe, they're going to suffer. And they're going to have the people beg for their help. That's what they want. You need us. That's the way they think. And this is what they're going to do during this economic crisis. They want people to feel the pain. They want people to suffer. They want people to say, please help us, do something, print money, whatever you got to do, just do it. Stop this. And of course, at this time, and this is the first phase of the entire economy coming down, they're going to say, we need more control. You want our help? We need more control. We need these laws passed. And this is most likely how the first phase is going to go. Laws will be passed. They'll be given more power. They'll create currency. They'll prop the markets back up. And we will have the second phase, where they were going to say that we improved the economy once again, and they know that this will not hold, and that's why they'll need some type of cyber attack or some other type of an event. But they will push the idea that they saved it and another country or group brought it down. But in the meanwhile, the people allowed them to get more control. This is what they're looking for. They want more control. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.